share float is open for the public to subscribe to. And financial literacy says to us that we need to understand what are the risk and return issues involved. We know that the price relates to return and risk. So we need to get ourselves informed about economy-wide issues, about industry issues, and then the firm-specific issues. How does this work? Well, we can look to the stock exchange, which has obtained reports from a number of analysts, and these are available through its website. And these reports investigate the company, look at the return stream, look at the risk issues, and make an assessment as to what they think the fair value ought to be. Right, well, this seems fairly straightforward then. The returns are going to come from the electricity price. And as long as the assets are in good shape and don't need a lot of maintenance, a lot of additional investment, then there won't be additional expenses and the revenues should be much as they have been. Well, that depends then on the electricity price. Are there risks out there to the electricity price that we need to be aware of? Well, first there's the TY point. TY point aluminium smelter. If it were to close in the next few years, then we'd anticipate the demand for power to drop off quite considerably because it is a big user of electricity, and potentially the price will go down. Perhaps we will retire some of our less efficient electricity generators at the same time, and overall the price won't decline very much and we will have greater productivity in the sector. The second is the intention announced by the Green and the Labour opposition parties to nationalise the electricity purchasing in New Zealand. Such a nationalising will take away from the private sector and put it in the hands of a government agency. This will impact upon the shareholders in private sector companies. It will be taking away without compensation from them. This is a major risk. The analysts have looked at this and said that it has an impact of probably 15 to 30 cents per share for Meridian. Nevertheless, the analysts are giving a range between, say, $1.30 and $1.90 or $1.92 for the shares. Treasury is putting the bid price somewhere in the $1.50, $1.80 range. We need to think about these things. We need to look widely, and then we need to make a decision. And our decision needs to be in the context of our portfolio investments, all our investments. We don't want to be heavily weighted towards one industry or one company, because diversification reduces risk. One entity, one investment, we bear the whole or total risk. So combining Mighty River Power and Meridian to represent all our equity investments is probably not a good idea. Financial literacy is about being able to be informed. We have to invest our time, our energy, our resources into seeking information, but we need to know what to look for. And as almost everything in finance, it's about knowing what we think the returns are going to be and what the risks are going to be. No risk, very, very low returns, and people want a considerably higher than low return when they invest in Meridian.